G'day, Cal.
How you going, Woody?
Good, man. It's been a long time, feels like.
Oh, it has been a while, yeah.
Yeah, well, you've been all the rage this week. We've devoted the entire week to your trading idea, the flag finder.
Yes, I'm super pumped to see what's going on out there in the market. And, all things point to a really good quarter coming up.
Yeah, good. Well, because it has, why don't we discuss the market first and foremost, just to set the scene a little bit? Because I know it did go a bit quiet. Your trading strategy, you went crazy in the first few months of the year. Then it went a bit quiet as things picked up again. Is that right?
Well, it's really interesting, as you're right. So we kicked off Catalyst Trader like halfway through last year. And of course, we had the big lift in the market that nobody expected. So things were just going bananas everywhere. There were, trades in the tech stocks, in the mining area, marijuana, lots of different sectors pumping because everything had been compressed so much. So there was a sort of a bounce back. Then by the time we got to about February, I'd say, the small cap sector in particular just started to lose steam. And sometimes there's really no rhyme or reason to this. And I said to my guys a while ago, it reminded me a little bit of a period in 2018 where you'd be following these stocks and you're like, hey, this is really exciting, or it's got this big thing coming up, and they just stayed flat.
Yeah.
And you sit there scratching your head and you go, well, what's different to 2 months ago? So we had a bit of a sort of a dump in a lot of stocks actually, across the small cap sector. Now the way I've danced around that is to narrow down the focus. So the first 6 months of Catalyst Trader, we had lots of different ideas across lots of different sectors. I've had to pull that in to focus on, well, right now I'm focusing on two very specific areas, which is gold and iron ore.
Yeah.
Because they've got high prices, big cash flows. A lot of the other sectors are still treading water a little bit. So the market always keeps you on your toes.
If the market is cooling down though, because I know the key thing about your service is that you really do track and spend an awful lot of time. We were just talking before I pressed record actually that you said your strategy is particularly labor intensive, but that's because you're trawling through the announcements to try and find patterns that could re-rate specific shares. Do you find that when the market is, or the small cap sector as a whole is having a bit of a flatten, that the announcements don't come off and don't re-rate the stocks as much, or is it kind of market?
A little bit of both, can be both. So you get a stock where it's quite funny, actually. Here's a perfect example. So last year I did a couple of trades in Drone Shield, which if you followed me, you'll know. And the thing flew up both times and we got some good wins out of it. Very recently, it came out with an announcement, which was much, in a monetary sense, much bigger than the previous two, and nothing happened.
Yeah. Right.
So again, it's sentiment and psychology is all part of it as well. So no, the reason I say my process is labor intensive is because, some of our guys trade off the chart and that's all good. That works or can work. But I like to go back through the stocks and make sure I've got a very good understanding of what's going on. Mm-hmm. Because it allows me to identify why it might go up, but it also means if things get volatile, well, I can go, well, I know I've done my homework here. I know I'm good, or I know what's coming, or they've got enough money, or what have you. So it just takes time to do that if you're not already aware of the stock. So I've been around a long time, so there's some stocks where I already know the story, so it's not as urgent. But if it's a new idea, I go back and I'll read the prospectus, even if it was 8 years ago, and I'll say, what did they say then to what they later did. So that's how I find those discrepancies. And just today I was going through one and I was like, and they had in their prospectus, which was a recent one, but the second half of the year is stronger for them than the first half. Now you have to get to page 147 of the prospectus to find that out. But nobody else is going to, well, most people, especially traders, don't do that sort of work. So that's a little thing I just put to the side, and we'll see if something turns up.
Yeah, and I guess that helps if you know the company, know the reason why you're having a speculation on a specific company or a specific trade. If things do go against you or are volatile, you know why you're in it in the first place, isn't it?
Well, I can give a perfect example. I won't say the name just for respect out of the current guys, but we've got a stock that I did a couple of months ago, little iron ore junior, it ran up for a bit. Then China came out and said, "Oh no, I got to stop Australia exporting and all this." Everybody panicked. The stocks got sold off a bit, and I just said, "Look, don't worry about it. It's all good. Everything's on track." Now, from that, you could have almost doubled your money if you'd stepped in at the low point. Then you'd have doubled your money by now. I think we're up about 50% or something. So
Yeah, right.
again, it's often when volatility hits, you want to have that confidence to know where you're at. And that's where, when things are volatile, where some of those other strategies break down, like technical analysis or buying breakouts or that type of thing. So every market, every strategy works for different markets. So, but for us at the moment, it's suitable for my style.
Yeah, right. So let's hone in on the two sectors you're looking at then. So I know you said late last year and at the beginning of this year, your sport for choice, really, it was just announcements coming from all different sectors. But now you've honed in on iron ore and what was the other one? Gold, was it?
Gold, yeah.
I've got iron ore and gold. I gave you a call when I was just driving to the office, and we just touched on it briefly. You said that not many people are really looking at the iron ore sector.
No, it's, to be honest, it's not something I've really ever followed much in previous years. I think we all just take it for granted that BHP and Rio, dig up the stuff and then pump out dividends at the end of the year. And the reason I picked up on it was there was a disconnect. So around about, I can't remember exactly now, but say February, March, stocks like Fortescue and Rio BHP sold off under the assumption that iron ore would go down. But it didn't go down. So I was going through my charts and things as I do. Well, that's always interesting when you get a discrepancy like that. And then I started researching into iron ore itself, and all the investment banks said, no, it's going down. It's overpriced. Brazil's coming back. China's slowing down. The goose is cooked. But when I started digging around, the industry itself, the companies in the industry were saying, and I've got a document now that's enormous because I've been tracking it for so long. No, actually, we keep shipping it out and they keep asking for it. And then the premiums of the different grades were going up, which is a signal that the Chinese steel mills are buying. And I love that situation, because when you had the stocks come down, that knocks out some of their growth premium and it lowers your risk, but your upside is still there. Because they're making so much money. There's so much money flowing through that industry right now. And then it surprised everybody. This is back when it was 160, 170. Nobody was calling it over $200 a ton. I just said at the time, I said it could happen. I didn't know it was going to happen. And lo and behold, it's taken off like a rocket. And there's been a bunch of stocks go up from that. So as of now, the party is still going. So I'm still riding along, and we'll see how long it goes for. Gold was a little bit different. So I watched gold go crazy. Didn't really monetize that particular bull run particularly well. But I remember around August, I said to my guys, like, this thing's going over the top. Like, it's too obvious now. And that was just experience. Anyway, we watched gold stocks get smashed down for 6 months. And then come March, I was like, oh, a bit like iron ore. You go, these things have been beaten up so much, but actually gold's actually still pretty good. They're still making a fortune. So I said, well, let's start buying some gold stuff. And so they've rallied up. And as of now, I'm still bullish on gold. So unbeknownst to me, I've suddenly turned into a gold bull, because I've always been skeptical of gold for the stocks. But so that's looking very promising as well.
Well, you tend to follow where the action is, don't you? So I'm not surprised you haven't got a fixed position on any one of these things. If the sentiment starts turning in the iron ore sector and you start seeing the announcements slow down, you probably look elsewhere, I'd imagine.
Absolutely. So all sectors go through cyclical little booms and busts, or periods of strength and weakness, and so the problem when you're trading or looking to you can't tie up your money in a bunch of different stocks that are just trundling along, because eventually I can give you plenty of ideas, but eventually you run out of money. And it's the same for me. So you want your money working for you all the time. And like with iron ore, like at some point, all the good news gets priced in, the upside, and then you go, well, this is run now. Like not in a long-term sense, but in a short-term sense. And then you go, well, let's sell those out and hopefully for a good win and go look somewhere else now. And that's what you have to do to not get trapped in one particular sector, because if it goes bad, then you're just stuck in it, and you have to.
How do you
and it can take years.
How do you whittle down? So take the iron ore set. So obviously we're not talking about the BHPs and that level of. Do you hone in on a particular type of stock? So I know you tend to focus on the small cap side of things. So are you talking like the real juniors?
Yeah, we got. Well, it's a mix. So you have usually your big stocks, mid caps, and then your juniors, and then you have to whittle it down to where they are in their life cycle. So are they developing it, like they're not producing yet? Because usually with a mining stock, if you want to be, there are certain times to be in a mining stock, if you're looking to trade it, not long-term investment.
Yeah.
Where maybe they're exploring and then they find a deposit and then it soars up, but then it'll sell down while they do they have to verify it and get geologists.
All that stuff costs money as well, doesn't it?
But yeah, they've got to run down and they usually raise money, Then they go into the building of the mine phase later on, and you can get a re-rate as that de-risks as they go. Yes, we got the license. Yes, we got the offtake agreement. Yada yada yada. Or they're just producing, and then you go, well, this thing it's a cash flow play and it's making lots of money. So the way I do it, I just I get all the relevant stocks and I start to go, no, too small, too risky, in the wrong country, crappy project, crappy deposit. And you whittle it down to a bunch of names and you go, well, these are the ones I like. And then you bring in some of the, charting analysis or market cap and whatever it may be. And then maybe you get a big down day on the market and it pushes the price down. And then you go, that's the one I wanted and I'll take it down. Thanks. So yeah, it's just a process. But as I said before, it takes quite a bit of work to build out an overview. And of course you have to get the commodity strength right as well, because you can go over every single, I'm trying to think of a dud commodity at the moment, silver or something, right? And if silver's not going up, well, then the stocks won't really do much. But because iron ore has gone up so strongly, then all the iron ore stocks are rallying.
And at what point do you start looking at the specific announcements of the companies? Because I know that's the key. I guess that's the separator as well of your specific strategy too. So
from the very beginning. So, to get a sense of where the company is and what it does, you have to go back through their public filings. So these announcements, if you're watching this, they're public filings that they make to inform their investment base of what's going on. So that's from the start. And then you build out a picture of what it's done in the past and, how much money they've raised, what they're trying to achieve, who runs it, all those things. So it gives you a very grounded picture of the company and wants to avoid. That's important too. Like it's easy to look at a ticker code or a chart and go, oh yeah, let's get on that kind of thing. But if you dig in, sometimes you dig into it and go, yeah, no thanks. So it's all process of elimination and analysis.
Yeah, right. And so how is it all going so far?
The iron ore stuff?
Yeah.
Iron ore's been good to us. So we closed out one good trade, which I think was about 40%, 50% in a month. I mentioned the other one that's up 50%. That's in like 2 months or so. I've got a couple cooking where I think they're going to start to go now. And we haven't stumbled too badly in that area at all. But again, the advantage came from the fact that nobody thought it was going to happen. So they were very cheap and it's worked well so far.
You mentioned stumbling. So what is your strategy for when a stock inevitably does stumble? Because they can be quite risky plays too, right? So you got to take that into account. What's your...
So I suggest two things. One's position sizing. So you never want to go too heavy into one particular thing. And of course you have a stop loss. So if the stock breaks through it, generally I'll close it out. Now, because I have a good knowledge of the stocks, I can tell when something is bad, you know what I mean? Or whether it's a glitch or volatility kind of thing. So I I do sort of reserve some discretion over that, but in generally, if things start falling and it's not clear why, then and it goes through your stop, then you got to cut it off. So I've had to do that. Sometimes you position for an announcement. Like I have perfectly. We had a ripping trade in a company called VRX, which shot up, and we were positioning for an announcement, and it just has not come. I don't know what they're doing, but it just has not come. So in the end, I said, "Look, we've just got to give this up. Like, it's been months now, and we'll look again down the track." So that can happen. It's all part of the dance of the market. But again, like we were up originally from the original Rico. So if you can try and limit the damage, it's all good.
Yours is one of the. What did one reader said? I was chatting to one reader when I was having my conversations with some of our alliance members, and he said he loves your service, but he said from the outset it almost sounded too simple. But they're the best strategies, right?
Well, it's funny. In a way, it is. Sometimes I see all these technical indicators, and these guys get their patterns and relative strength and moving averages and all this stuff, and I'm like, it works for me. It's just like it's much easier just to look up the company and learn what they do and see what might make it go up. You don't really have to overcomplicate it. Anyway, it's working for us most of the time. So, and again, like I'm lucky in the sense that most people can't do what I do. I sit here and watch the market all day, and I follow the companies. And I see all the commentary and I read through it and I get broker's notes and, all the other guys are chasing things down. Most people can't do that. So it enables me to build up a picture of what sectors are strong, which are weak, what the market expects, what it doesn't expect. And it's those little discrepancies and niches and insights that you only really get by doing it day after day. And it's oftentimes... I talked with Murray, one of our other traders. You have flat periods where you're like, I don't see any opportunities. There's nothing happening or nothing shift or it's all priced in. Then suddenly something comes along and shuffles all the pieces around on the board again. So
something's definitely happening to the momentum of stocks in general at the moment. Because I know another editor that I talk to very, very closely, Ryan Dintz, is another one of our colleagues. He has a momentum type strategy, which is proprietary, and he's developed his own signals. He kind of goes the other way to you, whereas he looks at like things like relative strength and all that sort of stuff.
But I'm not saying those don't work, by the way.
No, I know you're not. But I think across the board we've just seen a momentum flattening. There's been a flattening of momentum, and I think it's been happening in the crypto market too. Like it's just ranging.
I mean, you got to put in perspective too that last year was so intense and so big, and but again, things get priced in like, late or mid 2020, the market was pricing in the bounce in the economy, and that proved to be true. But now it's less clear, and some of the commodities have, they had big bounces, but now they're sort of flatlining like that. Well, again, that the market usually has priced that in by at some point, and so it's sort of waiting for it either to go down or to keep going up and shuffle the pieces around again. So. But yeah, again, it's, as I said, I've been doing this a long time. It's not unusual. It happens, but it can be very beneficial, especially for a guy like me, because it gives me time to build up another list of ideas and things. And then you start to follow them and you reset. And then when things start moving again, you know where you need to be.
You've also got another kind of viewpoint, I guess, from your work that you do in cycles, trends and forecasts too. So you're obviously you cover the stock side of things in relation to the cycle. Do you think that gives you an advantage as well when it comes to these things, or is it kind of the trading side is another boat?
No, absolutely. I mean, because so you're talking about the property cycle for. Oh, excuse me, my phone just went.
Yeah, you're right. How dare you,
Callum? Because property feeds into so many different areas, it gives you insight.
It's the land cycle, I should say. Sorry,
the land cycle. Yeah, absolutely. So just today, I've been looking at some of the financing companies. Of course, property prices are rising, so people are, buying homes and investment properties. So obviously, that needs to be financed. So you get a growing finance sector. So it's an area to look. When I see guys for example, talking about, maybe they want to short the banks or some play against property collapsing. Well, my view is that's not going to happen anytime soon, so I don't have to worry about that. So there's lots of things where it feeds into. So absolutely, it does. Now, with cycles of trends and forecasts, those stocks that I do there tend to be slow burning ideas where you, like the REITs, like I've put those guys into real estate investment trusts. Now those ideas have worked really well, but they're the type of stock where you get in a 6-month period at maybe a 10 to 20% gain and a 5% yield, where a junior iron ore miner might give you a 50% in 2 months. So it's just a question of how aggressive and you want to go.
Does final question? Does are you looking at commodities in general, or are you just looking at what's moving right now, or do you see a kind of a wider cyclical move in commodities in general?
I do. I'm a believer of the super cycle idea. I've followed this for a long time now. When I first started back in 2012, I read a lot of the commodity boom in the 70s and Jim Rogers and guys that made lots of money out of it. And I followed mining for all that time. And then we had the big drawdown in 2015, 2016. And what mining companies do in that period is they cut their capital spending to survive. Now, that's gone on for a lot longer than I thought it would have. It's almost been, a decade for some commodities. And that's going to play out now because suddenly we've got this booming demand for them. So things like copper, lithium, they're undersupplied, and they're probably nickel. They're going to stay that way, most likely. Now, what I've learned over the years, you do have to be careful with that. You can take that big picture and get excited, but you always have to remember that commodities are volatile, and you have to be very attentive to where each miner is in its life cycle and whether it's priced in already and whether you should be going with it. But no, absolutely, I'm following all sorts of commodities, mainly because if you can get them in the sweet spot like iron ore and gold right now, they're making so much money, and ultimately it's earnings that drive stocks. So if I can go to bed with, as I said, I did a podcast with Lockie the other day talking about one of my gold miners that I've tipped for Catalyst Trader. It's a little bit bigger than some of the really small guys, but it's got a couple of $100 million in the bank and churning out gold. And it's like, well, I can go to bed and sleep pretty easy knowing all that because it's cashed up and I call it a beast. Like it's just got lots of money, lots of production, and very, very profitable.
And is that one of the two stocks that you profile in your? Because keen-eyed insider readers will know that we published a presentation yesterday that you hosted called Flag Finder.
It wasn't the one I was thinking of, but the one that you're referring to is very similar. Yes.
Right. I noticed you're not going into much detail.
Well, they got to read the report, right?
Yeah. Oh, cool. Well, it's been a busy week for you, mate. We've normally only publish Insider 3 times a week, but we've kind of overtaken, and it's all been about you. So there's lots to look forward to in this space, I think. How many gold and iron ore picks are you actually following? Is it?
Well, I follow more than I pick, if you know what I mean. But what have we? We've got at least 3 iron ore plays at the moment and 3 gold. But I'm lining up another couple of goldies, and I've got my eye on the iron ore. I mean, I know them all. I just like yesterday, I was going over them again and seeing which ones are not worth bothering with and where each one is. And so we could do a few more. But even the ones I've got, like I expect big things, especially for the 3 we've already got. So it's going to be a really interesting quarter. Like I'm hoping for a big one.
Final point. One of our other editors, Brian, actually relatively new, real gold expert, and he's been investing in gold and all. He tends to look at the seasonality of the gold market. Do you think we're coming into a kind of a sweet spot for the gold market coming into August? Do you kind of follow that side of things?
Well, I saw his research and I put it in because it's just another quiver in the bow, really. Like it's I mean, as I said, they're making good money. Gold is rising. The Aussie dollar's gone down. So for Aussie producers, it's 2,400 over dollars per ounce. So that's good. Then you look at the history that says gold stocks generally move now. I'm watching them today. They're all going up. I mean, I've got a couple in my super fund as well, the big boys. They're going up. So looking good to me.
Oh, well, thanks, Cal. If any of you want to check out Callum's stuff further, we've got currently a presentation that Cal, I don't know how long it goes. I think it goes on for 2 weeks, doesn't it? No, joking. It's
not the presentation.
It's all.
I was going to say it's long. It's not that long.
Yeah, it's packed full of interest. And I think you also go through a live trading idea as well. That
absolutely
free of charge. You don't have to sign up or anything to get that. So if you haven't checked it out, do check it out. I think it's running up until Monday evening. I think it will be online for. So.
Yeah, and as I say, like it's exciting out there. Like while the ASX 200 looks a bit flat, and we've talked about before, some small cap sectors have been flat. Gold and iron ore are moving, and you only have to go and look up a few charts to see that. So yeah, good time to get on board.
That's a good takeaway right there for people to go away and do a bit of their own research if they want to explore that a bit further. So thanks for your time, Callum, and I'll speak to you again very soon.
Absolute pleasure.